Nodded on it this morning. Jeff Duncan is our guest, Duncan Financial Management. Good to have you on again, Jeff. From your perspective, looking at what Senator Dodd has proposed, now it'll be a negotiation process. What should be in, what should be out? What are the priorities when it comes to financial reform, do you think?
Well, I think obviously, as everybody has mentioned already, is how do we define too big to fail? And second, how do we define the risk that these companies are taking, these financial institutions? How do you define it? That's going to be very tough to define. I think even Secretary Geithner has mentioned it's going to be tough coming up with a definition that we all agree upon.
Right.
And as Chairman Mack mentioned, the $50 billion limit, where do we draw the line as far as being too big to fail? So there's a lot of definitions that have to be defined. That's going to be the problem, is obviously the Democrats and Republicans are on very different sides, with each side putting on about 200 amendments to this bill.
Right.
It's going to be very confusing for everybody to decipher exactly how this is going to come out. But eventually some form of the bill will come out before the elections, but can it get done before the elections is going to be another story.
Yeah, a lot of back and forth, as you say, between now and then. And there's a number of interesting angles there. You brought up some of them in terms of the limits on who's too big to fail. Some of the more aggressive advocates of reform have said we should just limit the size of the banks, period. That doesn't seem to be gaining any traction. But what is being discussed is what to do with them after they get in some trouble. What do you think of that whole idea of a quote-unquote resolution authority? Would that work in the future if a big bank were to run into some trouble like Lehman Brothers did, that it would be able to be wound down in some sort of a, in a fashion that, doesn't risk the sanctity of the entire market?
Yeah, to decide to make a definition of too big to fail on the size is going to be very difficult.
Yeah.
Is it going to be 50, 75, $100 billion? Very difficult to decide. And also, how do you unwind these positions? Well, first of all, I think you have to define positions that these companies should not get into, then define that it would be too big to fail.
Sure.
So I think the government's going to have a very difficult process of defining all this, because the only people that really know these too big to fail and what they're really getting into is the institutions themselves, which believe that they are not too big to fail.
Well, exactly.
And that the risks that they're taking are not risky enough to make sure that to define that they will have a downfall themselves.
Right.
So it's going to be very complex. I don't think there's really one specific answer at this point. It's just going to take many months of negotiations to make these definitions.
Right.
The Federal Reserve seems to be putting its foot in, and it looks like it wants to take over as far as being a regulator in the future.
Yeah, Jeff Duncan's out in St. Louis with us. We'll be back to you, Jeff, later on in the hour. Thanks for your perspective, but right now it's back over. We're going to bring back Jeff Duncan now, Duncan Financial Management, to talk a little bit about the effects of this. What do you think, Jeff? Google making the right move here? I mean, it's obviously a risk. China's the most populous country in the world and the biggest internet market. Still a small slice of their sales in percentage terms, but what would your reaction be to Google essentially pulling out of China, or almost doing that?
Well, even moving their situation over to Hong Kong, still China has very big hands and big reach even in Hong Kong.
Sure.
So I think you have to understand that Google has taken a stance that many companies in the future will take with China, and eventually China is going to either have to decide the competition is going to be the way they want it to be, or they're going to have to lean on the side of the Googles of the world and say, okay, we'll go ahead and allow more free speech. I think as time goes on, as China has seen in the past, they like the way we operate here in America, free speech and capitalist ideas. But it's going to take some time.
Well,
that's
the longer term. You're right. That's interesting, because that's the longer term decision that the Chinese government might have to make. In the shorter term, the decision for now is in the hands of U.S. companies. So if you're a U.S. company and you're thinking about expanding and doing more business in China, how does what's happened with Google change your thinking, or does it?
Well, I think for the competition, I think it does bring a nice opening in, because Google has taken a stance.
Like Microsoft?
But I think, like Microsoft, but Google is big enough that people will understand in China that they want to stick with Google, and I think the population in China will voice some concern that they can't get into Google. And once that's taken away, I think eventually the government will probably open up over time. But I think the problem that Google is taking, it's giving the opportunity for competition to move in. And quite frankly, even them moving over to Hong Kong, China still operates pretty freely in Hong Kong nowadays. So I would imagine eventually Google may have to make other changes than just moving their operations to Hong Kong.
Because the government could very well shut down that side if it chooses to your point as well. So it sounds like, real quick, Jeff, you think this is maybe the right time for Google to take this type of stand when the Chinese sales are still a small percentage of its overall sales, and you seem to think the government in China will be the one that has to, essentially blink in this case long term. Is that right?
I believe so, because I think the population will voice concerns that they can't get into Google and say what they want to say, but it is going to take some time. It's not going to happen overnight.
Not going to happen overnight. Well, we'll certainly keep watching it. Jeff, we'll be back to you in just a moment as well. We're going to recap for an instant audit on all of this. We bring back Jeff Duncan Financial Management. Now, Jeff, many investors have been looking for opportunities in this, and yesterday we did see many of the big drug-making companies move higher, their stocks. It's less clear what it's going to do to the health insurance sector. What's your view in terms of what you buy and what you sell, based on the fact that healthcare reform later today will be the law of the land?
Well, I think the pharmaceuticals that did very well yesterday will be the big winners. You bring on this many people that now all of a sudden have a subsidy to start buying medications. I think it's a win for the pharmaceutical companies. As far as the health insurance companies go, it's going to take them some time to actually figure out where they're going to be able to make some additional money and how tight the government's going to be on how much money they can make. The bottom line is, with the number of people that may have to continue with coverage even though that they're sick or have to take them on, is what the insurers really have to figure out. And the biggest thing that they have to figure out is, how is this going to affect the younger crowd? Because that's where the health insurers make their money, is the younger generation, because they don't have as much in cost for health coverage. So what's really going to be a driving force for the health insurance companies is the big section of population is the younger people, where they really make their money, and how well they can define the premiums for the younger generation. In addition to that, people that have to keep their children, can keep their children on their health insurance plans up to age 26, I think is a big benefit for families, because a lot of the kids that graduate from college usually don't have a full-time job, even in today's job market. So I think it is beneficial for the family. And for the small business owners, it only applies to companies that have over 50 employees. So I think that was another benefit for the small employer, that won't incur a penalty if they don't cover their employees.
The only problem with that, one small business owner brought up to us yesterday, was that you might have an incentive now for people to cut some jobs if they're a little over that threshold, and have more than 50 workers, and people trying to just get in under it so that they can get the benefits. I don't know if that'll happen or not, but it might.
It's a great point. Obviously, there's disadvantages to the plan as well as advantages. But and once again, I think the big winners will be the pharmaceutical companies and the large health insurance companies, because you're going to find that a lot of the smaller health insurance companies will just not be able to compete in this type of regulation that was put forth yesterday.
Fair enough, Jeff. Jeff Duncan's with us this morning. He's our guest from out in St. Louis. We thank you for that. Now it's back over.